Hello traders and welcome to a new video. I am currently dressed like a goth teen in high school, and without further ado, let's dive right in. Okay, so I'm first going to minimize this and we'll go into it. So typically what I do with types of videos like this is to just isolate one indicator at a time so that you guys, the viewers, can really pick up on as much nuances of the indicator as possible. What I'm going to be doing today is using Hyblock Capital to provide you with an entire system. So this is going to be a reversal trading system if you do so choose to use it. I know this looks like a ton of indicators, and I mean it is a lot of indicators. I'm going to walk you through each one of them and how they all kind of talk to one another and how that works out. Okay, so the first thing I want to talk about is what's going on with these like little bold lines. So these are liquidation levels. I've made a lot of videos on these in the past few years. Basically, it's predicting where BitMEX traders are going to get liquidated, and consequently where likely many other traders on other exchanges will get liquidated too. So if you look at just price and just these liquidation levels, typically price is magnetized to move toward these levels. So I call that concept gravity. The price gravitates toward hurting hurting retail traders. And some examples of that are right here. This is really sad, but it is worth showing. You can see all of these liquidation levels right here. We see price liquidate a lot of shorts just brutally. And just to show you what shift percent, that's enough to take out a lot, about a 4% move. That'll take out 50x traders and more. Then what we also see is that, look at this, price tails all the way down just to hit this liquidation level and goes right back up. And then after it kills the longs here, it just kills all the shorts. So a lot of traders who use this, I prefer, instead of a reversal approach, a gravity approach. What that means is if there are a lot of liquidation levels present higher, I'm more inclined to buy. If there are a lot of liquidation levels lower, I'm more inclined to sell. That does not mean I'm putting limit orders to open positions at those levels. You can do that, and sometimes you can get really fun trades like this right at the bottom, but I just like the more gravity approach, okay? So price gravitates towards these levels. All these levels higher, what did price do? It killed everyone. As you can see, when these levels were reached, that means that many people were liquidated. All right, let's move on. I really like this indicator too. This is just the aggregated slippage indicator. So what this basically measures is to think about what slippage is. Think about whenever there's a time where there's too many market orders or too many people being aggressive and not enough limit orders. That means that there's going to be a ton of slippage. So a ton of slippage basically occurs when a lot of stop losses or liquidations get triggered, because what ends up happening is so many people are trying to aggressively get out of the market that slippage gets very, very high. So if you're looking for really good reversal points, slippage is really fantastic. However, there are two kinds of high slippage scenarios, and you've got to be very careful with this next part. There's what I call, new trend slippage, which is something like this. How do we know? Well, it's all about the candlestick body. You can see here that these are strong bullish candlesticks. You cannot bring me one person who I would take seriously in trading and tell me that this looks bearish. This is insanely bullish. I do not care about the amount of slippage. This is very strong bullish activity, with the sellers getting like really nothing here. It's very strong, and price went higher. Let's talk about weak. What is a slippage point where price had a lot of slippage and it was kind of a weak candlestick right here? If you see right here, what ended up happening, my cursor's being kind of weird, that's annoying. What ended up happening is we have a very, very large tail right there, as you can see, and a lot of slippage. That's a very strong point of reversal. And for more, right here too, this is clearly, this amount of volatility led to two reversals, to be honest with you, as you can see. So this is just an indicator that I like to use for timing trades, i.e. when are we going to get in? And I'm going to show you the best possible spot. Here, this was a little bit deeper into a downtrend. And what we see is a strong bearish candlestick for sure, but the other indicators are just, everything is so brutally bullish here that this would have been pretty strong to buy. We have a ton of slippage, meaning that there's so many market orders here, just so many, And then if you get a lot of slippage and then pause, that's typically the sign of a reversal. However, if you get a lot of slippage and then a continuation, that's a very strong sign that price will just keep doing that. You know, it'll just keep continuing. Some examples of that, you know, like where was it? Here. Did we get any pause here? No. During the high slippage event, price just kept grinding higher. Okay? That is slippage. It's going to tell you when a lot of people are being triggered on their stop losses and on their liquidations. Now let's get into the next guy. So this is the average size of market buys and of market sells delta, meaning subtracted against each other. This one's pretty easy to interpret. It really won't be that hard for me to tell you guys, you know, how this goes. If you see a lot more red than green, that means that the sellers are in control. Price will likely be going lower. If you see a lot more green than red, the buyers are in control. Expect price to go higher. If you see choppy, expect price to go sideways. It's that simple. That's literally all there is to it. You don't need to get super complex with this one. Maybe you can look at spikes, you know, to time reversals, but for me, I like to look at this more like a period. You know, is there a period of more buying and more selling, or is there a period of, you know, more selling than buying? I don't think Hyblock likes how much data I'm using right now. But yeah, you can see that kind of here. Here it was just, this one was pretty clean actually. You can see this period right here would have been better to buy in the short term because it's all buyers. Why would we want to sell? This period right here is all sellers. Guys, if you see something like this, I mean, a lot of people will tell you, hey, you're getting a better price to buy, but you're really not because if one side's clearly in control, there's just no reason to fight it. If the sellers just keep on selling, I mean, I think better trading coaches will just tell you, just wait until there's a bit of buying before you buy. Because for a lot of reversals, you don't really know it's a reversal when it's going in the opposite direction. That's not an oxymoron, that's just a reality. What I mean by that is even this point that looked insanely bullish, you just gotta wait for a little bit of activity because the sellers are still like dominating. There's so much selling going on. I don't want to buy that. This system does not want you to buy. It's just too dangerous. If I see like decent amounts of slippage but nothing too crazy, the sellers are so dominant here. Look at this. The average sell size is so much harder than the average buy size. And price just can't go higher. There's no reason to buy here until you get to this. Okay? So that is how you interpret this kind of indicator. And it currently looks like we might be targeting these levels. A little bit more bearish, we'll see. Now the final indicator, and then for the part that you've been waiting for, we're going to put this all together into a system. So the final indicator is one that I've covered before. It's the top trader's average leverage. In green is the average leverage of longs of the top 20% of traders by volume. In red is the top 20% volume shorts, their average leverage, okay? That's what this is right here, and I'll get rid of this guy so we can view it a little bit more smoother. So what you want to see, you know, before a trend is basically you want to see the enemy or the opposite side of you being incredibly over leveraged. That's a sign that there could be a lot of, you know, brutality in that direction. Well, what do I mean by that? If we have a lot of shorts like right here, what do we see? The average leverage of shorts is crazy high. What we see here is that a lot of shorts are just kind of overly leveraged. And I don't really know what happened here at this change. I think that either a few very, very massive positions kind of winded down. Or I think maybe, where I'm getting this from, I believe, is OKX. OKX might have changed their leverage rules. Whatever happened, we can still, look at this. But a lot of shorts were very, very much leveraged right here. And this is just a very bullish sign. Now, now that you know what this is, typically we want to buy when red's on top of green and sell when green is on top of red. That's not an indicator you use by itself. You want to use that with other indicators as well. Now let's do a system, really the point that you guys have probably wanted to hear from. So really what's going on here is, let's break down, is this bullish or bearish? Looking right here. As my computer sounds like it's about to blow up. So what we can see here is I don't really see a bunch of, like crazy slippage points that indicate a lot of retail traders market selling or getting liquidated. I'm not really seeing a bunch of slippage. However, what we do see here is it's clear that a lot of the liquidation potential is higher. If price at this point was to just go a little bit higher, it could catch fire such that you liquidate these people, then these people, then these people, until you get up to about 25. That's exactly what happened. Unfortunate for those guys. Not only that, but look at the average buy versus sell size. I mean, you'd have to be a fool to think that the sellers are in control, guys. The sellers are clearly not in control here. Besides here and here, I mean, the buyers are just in control. So one, a lot of liquidation levels higher. Two, buyers are in control. Three, look at how over leveraged the shorts are. These shorts are crazy over leveraged, And what happened? Look at that. Price went right up, liquidated everybody. Every single trader here who was predicted to get liquidated got obliterated completely. So that right here in this range would have been the absolute best time to use this type of system. Now to recap what this system consists of, it's all liquidation levels from Hyblock. I put these to a 31-day though, just keep that in mind. Slippage, nothing changed there. Market order, average size, I have everything we need here and I switched it to delta. And then finally we just have top traders average leverage use. This setup is just going to indicate to me which side the retail longs, the retail shorts are about to get obliterated, And then this would have even been really good for short-term trading. But let's contrast this very bullish area with something that was quite bearish, which was right around here. So right here, in this range, what do we see? We see liquidation levels lower. That's already making me bearish. Slippage, I mean, I'm not really seeing any like high volume crazy points higher, but whatever. And to be honest with you, this is really muddy. This is pretty even. If anything, maybe the buyers were a little bit more in control because price was going up. But here it's just so muddy, so we wouldn't really have gotten much from that. And the shorts are a little bit more overly leveraged, which is a little bit more bullish. This is a bit of a confusing side. I mean, I'm not going to lie. This to me is very 50-50 with this system. 50-50 because this is bearish, obviously. This is nothing, and this is bullish. This is nothing because it's choppy. This is bullish, so, and this is really not telling me anything either, so it's all tied. Probably wouldn't have taken a trade there. There's really no need to. There's just not much of a strong indication. And then, this really gets turned on its head around here when the shorts get very, very over leveraged. So now I was on a 15-minute, but now I want to look at a much longer time frame, which is the 1 hour. And you can just see much cleaner signals right here. It's a lot cleaner. Like you can see just the massive leverage difference between the shorts and longs here. Great time to buy. Massive leverage difference between, like right here. Look at how over leveraged those longs are. It's insane. Look how under leveraged the shorts are. This is crazy. There's so many leverage longs right there. There's so many of them. And what happened to those guys? Yeah, not too good. So this is the system. It really incorporates all things that you're really going to need in order to hunt retail traders and make sure you're on the right side. Now to finish off this video, I'm going to give my little prediction of what's going to happen here. To do that, I'm going to go a little bit more short term on the 5-minute and zoom out, and we'll talk from there. So, of course, I'm leaning more bearish for this, and the reason is because we've had a lot of retail buying here. We have a lot of liquidation potential if price was to, go below 23,500. We're gonna get a lot of liquidations. We could get a very fast stop run, either with a wick or with a new trend. I'm seeing also this evidence not just by me saying it, but look right here and look right here. This is telling me, guys, that the longs are much more leveraged than the shorts. That's a very, 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 very scary sign for the bulls. I mean, if there's a lot of leveraged longs, that typically doesn't end well for those longs. Finally, who's in control in this range right here? Well, the sellers are a little bit more in control with size. Again, guys, this is just the average size of market orders. It looks to me like it got a bit choppy around here, but I would still say pretty confidently that the sellers are in control when it comes to who has larger volume sizes. And I think that I wouldn't be too surprised if price was to begin a little bit of a descent. You would see this get a lot larger as bigger sellers come in and smaller buyers come in and don't really fight back that much. So, obviously it would have been best to have shorted around here, around the 24 mids, 24.4, 24.5, 24.6. You would have been a genius because, you would have had all this, whatever. But I think that for me, this isn't uber bearish, but this is leaning a little bit more toward bearish because of the indicator, because of the things that I've told you. And I would love to see the longs get even more over leveraged. Look at the last time too many people started buying and the longs took on more and more leverage. Price was like, yeah, go die. It's so sad. It's kind of what happens here. The shorts were just becoming battered and really, really under leveraged. And then they were like, yeah, okay, bye-bye. To the longs, yeah. So I want to see the green get higher. I want to see more red here, and I want to see price beginning to liquidate these people. That's going to be it for this video. I hope that just a free trading system for me is helpful. Of course, the only thing that's not free is Hyblock. I'm not directly sponsored by them, to be upfront about you guys. The only thing I gain is maybe, an affiliate link, which, I get that, but there's really no other reason why I'm doing this video other than it's been working for me, and I want to share that with you guys. You can tweak this system, you can do whatever you want, but it's been working well for me, so why not share it? Happy trading.